Hello everyone and welcome to my morning report chart appraisals with me, Richard Perry, market analyst at Hantec, on Thursday the 25th of April. We've got a continuation of this dollar strength that can sort of run through the market, really runs through the forex majors. You can see this through the board here, where once more the US dollar is strong on all of the major pairs, with one exception being the yen. Yen having a bit of a comeback today, but look at this on the dollar index breakout in the last couple of days, confirming the breakout above 97.70. It's the highest level on the dollar index since May 2017, and the dollar has really taken off, and that comes despite Treasury yields, which have actually fallen in the past week or so. So that is interesting. So we're seeing the dollar breaking out despite Treasury yields falling. So there is a slight negative bias that we're seeing coming through the markets. We've seen Treasury yields falling. We've also seen the yen strengthening. We've seen gold forming a degree of support, certainly not falling precipitously on that gold price, having broken down below 1276, 1280. Talk about the technical implications of that, but also, as I said, the yen has regained a bit of strength, even though it did break out on dollar yen yesterday above 1220. Sort of had a bit of a retracement move. You had the Bank of Japan out overnight on its monetary policy decision. It sort of held rates steady as expected, and expect to hold rates at current levels for at least the next 12 months. It's not a great deal of surprise in that communication from the BOJ, but it just comes as central banks turn increasingly cautious, and subsequently that caution might be something to do with why we've seen markets just a little bit uneasy at the moment. We've seen the S&P 500 breaking out, or at an all-time closing high, I should say, yesterday. That move just unwound a touch. All-time closing high 2 days ago, unwound a touch yesterday. It'd be interesting to see how much further that run higher can go. You've got the European markets, which are shading slightly lower today. Futures basically flat on the day in the US after a little bit of a tick back. So yeah, it's an interesting sort of crossroads we see these markets at. Now, in terms of data points, we've got the US durable goods at 130 today. That's the final really important data point that you've got on the calendar until the US GDP number tomorrow. Ex-transport durable goods expected to grow 0.2% on the month. Then we're expected to see initial jobless claims rising slightly to 200,000 from the 49-year lows of 192,000 last week. But that durable goods number is important. Now, chart of the day is the dollar Canadian major pair, and that comes hotly off the back of a cautious Bank of Canada yesterday. Now, the Bank of Canada pretty much priced out the likelihood of a rate hike this year, possibility even of a rate cut now, as it cut growth expectations quite sharply, and subsequently the dollar Canadian just massively smashed through resistance to 4-month highs, actually through 34.70, and that breakout comes in momentum indicators which are increasingly positive. The MACD lines ticking higher on a cross, RSI above 62, stochastics in strong configuration with a bull kiss. So it's looking pretty positive for a move back towards that 36.65 December-January high, which actually is the implication of a range breakout from this range of the past 8 weeks. So you'd be looking at buying into weakness on that. The breakout level at 34.70 is now a basis of support. You've got on the hourly chart, you can see here, move above 34 figure was a key move from April trading, and it now suggests that you've got a near-term buy zone, I think you would argue, between 34.50, 34.70, but anything back to find support above 34 figure I think would be a positive. So it certainly looks as though the dollar Canadian is now going to be making headway towards those highs again. So I wish you good luck in your trading today, and I'll speak to you later.